Welcome to another financial video from C-Brockett Financial Services. In today's video, we'll be going over the difference between credit unions and banks. A lot of individuals have been asking me about these two and what the difference is and which one will work better for them. So I'm going to give you a little details to decide which one works better for you. So before we start, make sure you follow us on Instagram, C-Brockett Financial Services, and also YouTube, C-Brockett Finance. Every week I provide you all with another financial literacy video. If you all want a specific topic, just drop the details in live video and I'll get that information over to you all. But let's start. I have banks on the left side and I have credit unions on the right. We're going to start with the banks. Banks are for profit. The reason why I say they are for profit and why they are for profit is guess what? Banks allow individuals to what? Buy shares of the company. If you have Bank of America, JP Morgan, and so on, they allow individuals to buy shares of the company. And guess what that means? Banks are owned by what? Shareholders. So that's a different thing. So what shareholders are the individuals who purchases that stock, the individuals who own that share of the company. So that's why, banks are for profit. We're going to go down a little bit more. Regarding banks, anyone can join. So if you go to a bank and you need to start a bank account, bank accounts do not judge you based upon your credit. They really judge you based upon what the banking system. So if you have defaulted on another bank before, what banks will then do is have your name in the system. That's why if you have defaulted on the bank, they will never report your information to the credit unions. However, if you defaulted on a credit card from a bank, they will, but not the bank account itself. That is stored inside of the banking system. So if you have defaulted on the bank loan, bank account, you would then go to a credit union because they do not use the same systems. Down a little bit more, we have the difference between banks and credit unions are bank-owned ATMs. So for example, let's say if you have an account with Bank of America, you have an account with Chase, just in general. What they will have is that they will have their own what? Banks. If you go to another bank system, say if I have a Bank of America card and I go to a Chase account, what then happens is what? My money is then deducted. I receive a surcharge. So $4.99, $5.99, $3.99 are typically the fees, depending on which ATM you go to. But banks have their own bank-owned ATMs. And then we go down a little bit more, what we have is what? Banks have better technology than credit unions. Let's say, for example, credit unions don't offer Zelle. Banks do. If you judge the bank app from the credit union app, you will then see that banks have better technology within their systems. Credit unions usually lag that technology from that standpoint. The next thing is what? Banks are more convenient than credit unions. You will see multiple banks within the same industry or the company in different areas, then you will see credit unions. Credit unions usually don't go so wide across the nation depending on which credit union. Let's say, for example, you have Gold Coast Credit Union, you have Tropical Financial Credit Union, you have Velocity Credit Union. You won't see all those banks in different states. However, you're going to see Bank of America in every state. You're going to see SunTrust in every state. Now, we're going to go to the side with credit unions. Credit unions are not for profit. They are actually owned by the members that have that are with their banking system. Credit unions do not offer shares to the industry. So, when we go down to the next one, they are owned by its members. But another thing is that to get a credit union account, it's community-based, credit-based, or sometimes it's just widely open to the industry. So, for example, let's start with community-based. Certain credit unions only allow individuals within that area or that community. Or you have other credit unions that only allow individuals who are referred to that credit union. Then you have another thing is that some credit unions go based upon your credit score. So you have a lowest credit score with a very defaulted past in your credit history. Certain credit unions will not allow you to be on their system. I'm going to go down a little bit. Shared network of ATMs. This is very important because banks have what? Their own bank-owned ATMs. Credit unions have a shared network of ATMs. So let's say, for example, if I have Gold Coast. Gold Coast, if I go to a Gold Coast ATM, it's free to deduct money from that account, from the ATM. Now, let's say if I go to Publix. From that standpoint, Gold Coast has a contract with Publix, and when I deduct money out that, it's free as well. Unlike banks will charge you a fee for using a different ATM that's outside their network. Credit unions, if that credit union has a contract with that provider or that station or within that network, you won't receive a fee. So I'm gonna go down a little bit on higher savings rates. So credit unions do offer higher saving rates than banks. Banks usually offer 0.1%. You usually never see good money if you leave money in a bank account. That's why we tell individuals to heavily invest. Credit unions, since they're much smaller and they want to have better customer service within that, they help people out. They're willing to give you a hand, and willing to lend you a hand and get a better rate regarding anything that you save with them. Another thing is lower interest rates on loans. Credit unions do offer lower interest rates on loans than banks. Banks are usually, remember, banks are what? For profit. Credit unions are not. So since banks are for profit, they will charge a higher interest rate than credit unions. That's the key thing to remember. So I usually tell individuals, get a car loan, go to a credit union. Get a mortgage loan, go to a credit union. It's usually better than banks. Want to go down a little bit, better customer service. And what I mean by that is that credit unions usually have a one-on-one customer service. They know you from you coming into their branch, for example. Banks, hey, may I see your ID and further information. Credit unions are more lenient if they know you in particular, but credit unions offer better customer service. Credit unions want to keep the individual in there. You get a bank account with a bank, you tell them, hey, I'm going, bye-bye, they're not caring about you. But the credit unions want to make you stay there. Another thing that I didn't write down is that credit unions are more lenient with helping you start building your credit. Credit union will give you a small loan. If you don't have any credit, just in general, credit unions will be lenient to give you out a small loan, and then they will then report that loan to all three bureaus to help you build your credit over time. Banks, you ask for a loan, if you have bad credit or no credit at all, banks won't give you anything. A little bit further down is that lower surcharges. What I mean by this is that, let's say for an individual who has overdrafted on a fee, for example, I know a lot of people have been through this situation. You got a bank account, you overdraft, that $35 will hit you right then and right there. And then while it's overdraft, they're going to allow you to keep overdrafting and charge you those fees. Credit unions are more lenient with that. Sometimes, most of the time, they don't allow you to overdraft, but if you do overdraft, your fee is much smaller. Now, so my advice to a lot of individuals, you have to weigh the two, just in general. Banks, you have more banks, locally or nationwide. Credit unions, you don't. My advice to a lot of individuals, what I tell, is that if you have a credit union, you have a bank, let's be smart. Put more money inside of your credit union, but always keep a bank account. And what that goes into is what? Diversification. You never put yourself in a predicament to lean on one system. You have two systems. But just put more money inside of your credit union. Interest rates are better. They're willing to help you, build your credit over time. Banks are not, but it's more convenient to wherever you're going. You don't want to go to every ATM, or you don't want to go out of state, for example, and be charged surcharge fees for pulling money outside of your credit union with your credit union card if you need cash. Banks, you're going to see that bank in a different state. So have both accounts, but listen, we're saving money this year. We're saving money for the future, just in general. Put more money inside that credit union bank system and put less money in that bank system and differentiate the two, but always have both of them. So, hey, that's it for the video this week. I just want to go straight to the point for you all. Banks versus credit unions. I'm going to definitely drop this video on YouTube, so if you did miss it, you'll be able to see the video. Make sure you follow us on Facebook, Brockett Financial Services, YouTube, C-Brockett Finances, and that's it for today.